Vanakkam, this is Salem Sundar, and this is an exclusive video for my dear children of grade 11 business stream and accounting. Already we have completed introduction to accounting and theory base of accounting, and now we have recently started the recording of transactions. In that too, the business transactions and source documents already we have discussed. Now we are in accounting equation, that is rules of debit and credit. Here equations, there are two approaches. Okay, now let us see dual aspects of accounting, that is double aspects. The accounting equation is a statement of equality between debits and credits. This is the main point. For each and every transaction there will be at least one debit and at least one credit. Both should be equal. This is the point here. Don't confuse yourself much, later you will come across easily. The rules of debit and credit depend on the nature of an account. For this purpose, all the accounts are classified into the following five categories in the accounting equation approach. I would like to remind you here one thing. There are two types of approaches. One is traditional conventional approach, other one is accounting equation approach. Now here we have deal with only accounting equation approach. Fine. Assets account, capital account, liabilities account, revenues or income accounts, expenses and or losses accounts. These are the five categories that we will later discuss in detail. If there is an increase or decrease in one account, there will be an equal decrease or increase in another account. This is a point that you can try to know. Example, you bought a car. See, obviously there is an increase in the asset, that is your car. You have got a new one, it is added with an asset. And the second point is there is a decrease in an asset. To buy a car, certainly you will have to pay the cash. When you pay, automatically your cash balance will get reduced. This is the thing. When any transaction happens, one will increase and other will decrease. Which will increase and which will decrease? Let us see. And what should be done with that? That also will proceed. Accordingly, the following rules of debit and credit in respect to the various categories of accounts can be obtained. The rules may be summarized as under. Entries in the asset, expenses and losses, debit and vice versa. Entries in the liability, capital, incomes and gains, credit and vice versa. These are the two rules. One is, if there is an increase in the asset or expenses and losses, we have to debit the asset concerned or expenses or losses. And vice versa. What is the meaning of vice versa? The opposite. That is, if there is a decrease in the asset, expenses and losses, we must credit the account. This is a point in that. The same way, if there is an increase in the liability, capital, incomes and gains, the account is to be credited. And vice versa. Vice versa, if there is a decrease in the liability, capital, incomes and gains, that account is to be debited. This is a point. Fine. You need not mug up or store in mind without understanding. When we go in a practical, work out some 5 or 10 transactions, this will subconsciously get fixed in your mind. You need not worry it about. Okay, now what are the steps next? First one, identify the two accounts of a transaction. Example, you bought a car. You bought a car. So, buying a car is a transaction. The two accounts involved in this was, one is car and the other one is cash. Two accounts are involved in this. Then the next one, identify the elements of two accounts. That is, car is an asset, cash is also an asset. Very good. The third point, note the effect whether it is increasing or decreasing of each element. Car account is an asset, it increases. And B, cash account is an asset, it decreases. Hope you understand. When we buy a car, naturally we have to pay cash, our cash balance will get reduced. Now apply the rule. The rule is interest in the asset above what we discussed, the same thing. Here, car account is an asset, it increases, so car account is to be debited. Because see, interest in the asset is to be debited. That is a rule. Cash is an asset, it decreases, and the rule is see vice versa. Cash account is to be credited. If there is an increase, the asset is to be debited. If there is a decrease in the asset, it is to be credited. This is a rule. Okay, this is enough here. Now let us go for the practical application. You may find it so easier. Are you ready? Yeah, come. See here in the top, I have given you the rule: increase in the asset and expenses and losses, debit, and vice versa. Increase in the liability, capital, incomes and gains, and credit, and vice versa. Fine. Now, shall we start? First one, Ganesh started business with cash. Ganesh started business with cash. The two accounts involved in this one is cash account and capital account. Children, this is done only for your understanding. You need not do like this in the examination or even your workbook. This is just for understanding. Okay? Right. Now, first step is to find out the account. Second step is what element that is belongs to. Cash belongs to, sorry, cash is an asset and capital is a capital. It is a separate entity. So we have to mention this only capital. The element is capital. Okay, what is the effect? When business started, cash comes in, so the cash balance increases. The capital also comes in, it is increasing. So before starting a business, there was no, the capital was zero. Now when it is introduced, the capital also increases. Okay. So what is the rule? Cash is an asset. So asset, increase in the asset is to be debited. So action is debit. Debited nu vechikalam. Right. Next, capital increases. So increase, see, increase in the liability, capital. Capital. What we have to do? We have to credit. So here, credit, credited. Okay. So in this way, first transaction. So the first transaction, Ganesh started business with cash. Cash and capital are two accounts in this. Cash belongs to asset. Capital belongs to capital itself. Cash increases as well as capital increases. Here you may come across that both are increases. How one is debited and one credited? Please look at the policy. Even though both are increases, but they are opposite elements, so negative result only will be there. I need not explain this. Okay, now let's come to deposited cash into bank. So what is the meaning of that? That is, you have got the business started, the amount is invested, the amount you are depositing in the bank. That means the balance from your hand that goes to bank. That means your cash balance is decreasing, your bank balance is increasing. This is the point behind that. So here the two things are cash account and bank account. Bank Account means cash in bank. That is the meaning. Right? Oh, cash is an asset. Bank is also an asset. When we deposit money, what happens to us? Whether our money decreases or increases? Decreases. Am I right? Yeah. In the bank balance, whether it is increases or decreases? Increases. Good. So cash account asset decreases. Bank account asset increases. To be easy for you, already seeing cash when it is increases, we debit it. When the cash it is decreases, what should we do? What should we do? Yes, credited. Obviously, next one is debited. Hope you understand. So, cash account is an asset. It decreases as per the rule. It is credited. Bank account or bank, it is an asset. Our bank balance increases, so it is debited. Okay, good. Now it is 11 minutes are gone. Fine. Let me stop here and continue in the next episode. Thank you. Thank you very much for having listened to my lecture. See you in the next episode. Bye bye.